Hey guys, this is Sumner Healey from landinvestor.co, and in this video we're going to show you guys how to sell your land flips 6 times faster. If you guys are new here, I'm the guy with the worst hair in the land industry, but we make videos teaching folks how to scale and grow 6 and 7 figure land investing businesses. We also run an education company over at landinvestor.co, teaching you guys the exact specifics on how to do this. And in this video I'm going to show you guys the tools that we're using in this current market climate. As the real estate market slowing down, the land market slowing down, how are we still able to sell our properties quickly? And I was actually just at a conference out in Texas with a whole bunch of other land sellers, and one of the interesting things one of the guys brought up, he was a moderator who actually put on the event, and he was talking about how they're seeing a 6x increase in how quickly they can sell their properties from one simple trick. But before we discuss that, we need to address the fact that I think a lot of people in the land business, they think of either you're an owner finance seller or you're a cash seller, and that's it. Those are like they're two different strategies. And we really first need to reframe and understand that these are two different tools in our tool belt that are going to be used for certain property types. They're also going to be used in certain market conditions. What we're experiencing right now is a slowdown in the real estate market. We're also having interest rates going up. It's trickier to get financing. And so what we're seeing is one of the easiest ways we can sell our properties faster is by ensuring that every single property in our portfolio, everything that's listed, has owner financing attached with it. The trouble is you get some folks in this business who say, I'm just going to sell an owner financing, and you get some people that say, I'm just going to be a cash seller. The reality is that doesn't work. You've got to look at this as tools within your toolbox. If you're not using them all intelligently, you're most likely going to get left in the dust. You see, what we're seeing in our business right now for cash flips is about 2 to 4 months, depending on the market that we're in and the price point that we're in, to move those deals on a cash basis. Now, when we're offering really competitive owner financing terms, we're seeing these properties moving in 2 months or less, and in some cases, it's in a matter of just a few weeks. Now you might be saying, but Sumner, I don't like doing owner financing. I've never done owner financing. I don't understand the specifics of it. And let me kind of just break down a framework that we use in our business that should paint a little more of a clear picture for you. So anytime we're listing a property, there's a few things that we want to keep in mind. The very first thing is if we're using owner financing, we want to ensure that we're building out terms that allow us to get our basis back in 12 months or less. 12 months is kind of the ceiling. In some cases, we'll go beyond that. I've had properties that go up to 16 months till we get our full basis back. And what we consider our basis here is the purchase price for the property, as well as any title costs to get the property closed. We kind of combine those two expenses and say that's our basis in the property. We're looking to get that in 12 months or less. The reason is we want to get that capital back so we go and recycle it again and again in other deals. Now, while we have had some properties that have exceeded that 12-month limit, quote unquote, and it's a hard, fast rule, we don't totally abide by it. We have the majority of our properties are going to be 6 to 8 months until we actually get our full basis back. And then from there, it's just positive, free and clear cash flow that we've got coming into our business every single month. And so if you're new to owner financing, that's the first thing you want to keep in mind. Build out terms to where you can engineer it so you have your basis back in 12 months, but a couple caveats there. So the first caveat is if we want to make our owner financing terms as enticing as possible, the down payment is the biggest lever we can control. And I see a lot of novice land resellers trying to get their full basis back in the down payment or 75% of their basis back or whatever it may be. And this is hyper unrealistic. Now, if you're in a market like we were, a year ago or 2 years ago, where land's just flying off the shelves, there's a ton of liquidity out there, you can get away with having a really high down payment. Nowadays, we're 5 to 10% of the purchase price for lower end properties. That's because it's typically going to be an entry level buyer. It might be their first time buying land or buying any real estate for that matter. They typically just don't have much liquidity. For our more expensive properties, it'll be like 10 to 30% that we're looking for in a down payment. The reason we can get away with a little bit of a higher ask there is because there's typically less competition in terms of other land folks in that same market offering owner financing. Like for example, if you go look at land in Mojave County out in Arizona, you'll notice that pretty much every property has owner financing included on it. So it's hard to really cut through the noise and have a real competitive edge. But if you go out to Polk County, Texas, for example, there's going to be very few properties that are listed with owner financing out there. And in fact, most of the listings are going to be retail listings. And so we might be one of 5 or one of 1 in terms of listings that actually have owner financing. So we can usually have a little bit of a higher ask in terms of what we're asking for in the down payment. The next thing that we need to focus on is having monthly payments that are reasonable. Like kind of the old adage in the land business is, hey, you want a monthly payment that resembles a car payment, $200, $500. For some of the higher end properties, again, you can get away with a little bit more. I think once you start exceeding $1,500, $1,000 a month, it definitely becomes more difficult. And at that point, what I would recommend is setting up some kind of balloon payment. So maybe you have it financed over a 10-year period, so they're making payments as if it was on a 10-year period, but on the third year, all of it's due, or 60% of it's due, or whatever it may be. So you have a big balloon payment, and then you're getting a lot of your capital back. But for most folks, you're going to want to have payment terms that resemble a car payment. If you can't do this, then I'd say $1,500 is about the most that we've ever seen personally, and from a lot of the other land sellers that I've spoken to, $1,500 is a pretty safe cap in a lot of situations. Now, of course, this is going to flex up and down depending on what kind of property type you're selling, and you have to imagine that every single property type has its own buyer persona attached to it, right? And so if I'm going and selling $3,000 desert squares out in Mojave County, to use that same example, there's no way I can get away with offering $1,000. It just does not line up with that buyer persona. These folks might be making $4,000 a month or maybe less, and so that's going to be way too much in terms of a percentage of their income to divvy up towards going to a payment on a property. But if I'm selling a $500,000 property, one, there's very little competition for other folks offering owner financing. And again, that buyer persona that's attached to that property, they can probably swing a couple $1,000s a month for a payment. So you want to keep in mind, what kind of buyer persona am I working with? And the way you can figure that out is what kind of land am I selling? And that'll kind of inform you in terms of what you can or can't charge. I think one of the other things to look at anytime you're building out owner financing terms, go look at the competition. Is there even any competition that's offering owner financing terms? In a lot of markets, you'll find that the answer is no. And if there is, what kind of terms are they offering and how can you beat them out, right? It's the same thing with our marketing. It's the same thing with our total offer price on the property. Same thing with owner financing terms. We want to have an edge over the competition. Now, we don't want to solely compete on price and try to race to the bottom, but there's ways you can build out terms that are more favorable for the end user. So you might have a higher purchase price or the same purchase price, but you could offer a lower down payment or a lower monthly payment. That's going to make your listing more competitive than the next guy. But it's just a general rule of thumb in business. You don't want to compete exclusively on price. It's going to lead to a race to the bottom, which isn't good for anyone. And this brings us to the next point, and that is total purchase price. Now, one of the interesting things about offering owner financing on your property is if you have a low enough down payment and you have really competitive terms and a great monthly payment that most people can afford, and you're kind of opening yourselves up to the widest audience of potential buyers, you can actually get away with a higher purchase price in a lot of cases. A lot of times people are actually not so much so focused on the purchase price, they're more focused about what can I afford here and now. And what that looks like is, what can I afford as a down payment and what can I afford in the upcoming months for a monthly payment. That's more important than looking at the total purchase price. And so if you're having to accept terms that they're a little bit less favorable, maybe you're at 14 months for a payback period, we'll build out the terms in such a way where you're getting a larger total return. And one of the beautiful things about owner financing is you are engineering these terms before listing the property. And so in any situation, you can typically make it work for your current setup, right? Maybe you're not gonna get that full basis back in a quick enough period to hit that 12-month mark, but as a trade-off, you could probably increase that purchase price and get more of a ROI and more of just a total cash amount sent back to you over the longevity of that note. All right, so this is the very last point that I'm going to discuss in this video about owner financing, and this is a very, very high level strategy for folks that are really already in the business. If you've built out a note portfolio or you're continuing to build out a note portfolio, one of the most beautiful things you can be doing right now for your business to give you a leg up on the competition is leveraging owner financing. Like we talked about, leverage owner financing, follow the tips in this video. But one of the things you can do if you need more cash in your business right now is you can begin selling off those notes. Now, once you begin seasoning those notes for, it could be as little as 3 months, could be as much as 12 months, 24 months, whatever the note investor wants in terms of a seasoning period, you can begin selling off those notes and getting 70%, 80% of the actual value of that total note back to you in a cash payment. This is one of the most high level and advanced strategies that really no other land investors are doing. Imagine if you could sell your property 6 times faster and then go and recoup 80% of that total note value. The beautiful thing about doing this is in almost every single situation when you're selling on owner financing terms, you're selling at a very large premium over the actual cash price. And so recouping 80% or 70% in a lot of cases is actually going to be higher than what the cash price was going to be in the first place. And you get to collect and keep the down payment as well as a document prep fee. So you're just selling the actual note value of the amount that's being financed, and you can go and recoup that capital and redeploy it in your business. So what we have happening right now in this environment is it's more difficult to actually go out there and sell our properties for cash. We also have folks that are sitting on the sidelines sidelines with liquidity because the stock market's crazy, the real estate market's crazy, crypto's crazy. And so you have all of these investors that have capital on the sidelines. If you can come and offer them a smoking hot deal by selling them notes at a significant discount, for most of them, they're not going to see a return anything like that anywhere else, especially when it's actually backed by real estate and they own the underlying asset. This is a beautiful strategy that we're currently building out in our business right now, trying to figure out how can we sell these properties faster and then go and sell those notes to investors and then go and get that basis back plus the premium and then go and keep on redeploying that in our business. So this is a strategy that we are currently acting on right now. I figured it would be of value to you guys, even if you're just getting started in this business and the idea of selling notes seems so far away and unrealistic for where you're at. There's still a nugget to take away, and that nugget is do not play the game of being just a cash seller or just an owner finance seller. You want to be using both of those tools in your tool belts. The last 2 years, it's been a great time to be a cash seller. Deals were flying off the shelves. People wanted to offer cash. There was a lot of liquidity in the market. Things are really changing now, right? And so if you want to have a leg up on the competition and consistently sell your properties quickly, which in this business matters almost more than anything else, the velocity of our money, how quickly we can go and put money out and then come and take it back and redeploy it, is one of the most important metrics we can focus on in this business. So adding owner financing to all of your properties that are listed now and properties that are coming up in your pipeline is going to make a big difference in terms of how quickly you can sell your properties. And then if you're more advanced, you can look into actually going and selling those notes and then just keep that snowball rolling. So hopefully this video was of service to you. If it was, give it a thumbs up. If it wasn't, give it a thumbs down. That's fine as well. And if you're looking to build a land investing business, be sure to subscribe. We've got lots of great content in the pipeline being released every single week. See you guys in the next video.